Hey guys, it's 10:02. Why don't we get started?
Great, Carter.
Hey, thank you everybody for joining us, and thank Rob and Alexis from Sabre Financial for being our experts today. I'm proud to say Rob's a friend and a colleague, and we were talking about some of these details a week or two ago, and I was shocked at the nuances and requirements to have your loan forgiven. So I asked him if he would do this, and Rob, I really do appreciate it. So one quick thing, if you would, when you have a question, if you would simply open your chat box, which is at the bottom of your screen, and ask via chat. That'll keep the microphone from getting stuck on everybody. With that, I'll let you go with it, Rob. Thank you so much.
Carter, thank you very much, and good morning and welcome to everybody who's here on the call with us, or maybe who watches this on video later. I am Rob Johnson, managing partner of Sabre Financial Group. Joining me, I'm in Houston. Joining me is my business partner, Alexis Clark, who is from Australia originally, but from Austin, lives in Austin, Texas now. Alexis will, I'll kind of get us started here today, and then Alexis will finish things out, and then we'll probably spend maybe 30 minutes or so going through some slides now, sharing some information, and then we'll have plenty of time for questions at the end. And if there are specific questions that you have afterwards, certainly we're able to follow up individually later today, later this week, next week, however, whatever you need, whatever you have some time. So first and foremost, many thanks to Carter, Freeman, and Freeman Benefits for putting this together. To Mike there also for all of his support and getting us ready. We certainly appreciate the opportunity. I don't want to belabor the point too much. I know your time is valuable, so let's jump into it. I do want to mention quickly Carter's company, Freeman Benefits, is an independent agency representing mid-sized companies in health insurance and benefits. They've been around for a long time, and I know they do a really good job. So I did want to mention Freeman Benefits, obviously, and thank you, Carter, again for having us here today.
Thanks, Rob.
Hey, Rob.
Yeah, Mike.
Can we launch the poll real quick, just to kind of level set where people are at right now?
Sure. Go for it. Yeah.
All right. So we're going to launch a poll, and want everybody to vote. What we're trying to figure out, as Rob and Alexis are talking about the PPP process, is where everybody is at right now. That second one should be, we've been approved for the loan and are awaiting funding. So let's just say you filed for a loan, you're approved, you don't have the money yet, and now you're trying to figure out what to do with it. Maybe you filed a loan and you're waiting on approval status, not filed for a loan yet. Or maybe you're just here to learn more about the PPP process so you can help your clients with some content that would be valuable to them. So if you wouldn't mind, we're just going to take a couple seconds. We're about 80% through of the attendees that have signed on. Then we'll share the results and go from there. Right now, it looks like the first one's the overwhelming winner, Alexis and Rob.
Good. So most people have received the money and are here to try and figure out what happens next. Yes?
Yeah, absolutely. So hopefully there'll be a lot of great questions about that. And remember, along the way, guys, if you have questions, please put them in the chat box, and we will spend as much time as needed making sure you get the answers you need.
Terrific. Very good.
I'm going to end the poll. We're about 85% of the way through. I think from my underwriting days, that would be statistically valid, but here's the results.
Oh yeah, terrific.
Overwhelming majority have received money, and they just want to figure out, hey, what do I do with the money? Is it something, how do I avoid some of the pitfalls and some strategies around how best to use those funds?
Terrific. Yeah, those are good. That's great to see those responses, and that does set the stage. So we will spend much of the presentation today talking about the forgiveness aspect of the program. I know that's a huge point for everybody right now. We will also touch on some other important points too as you move ahead and plan ahead. So Mike, thank you for that, setting the stage. That's very helpful. Very quickly, just one slide. Sabre Financial Group, based in Houston and also Austin. We serve the small business community throughout the U.S. and Canada. We provide transactional and fractional CFO services to small businesses that don't really require a full-time resource. but that do benefit from having some additional experience and guidance. Capital solutions, business acquisition support, and a host of other recurring types of CFO services as well. So with that, one final bit of admin. Listen, we think we have some really good information for everyone today. We think it'll be helpful. We certainly think it'll do enough to at least help you to identify red flags. But we're not tax experts. We're not attorneys. We're presenting the information the best we know it, the best we understand it, based on the interpretation of others, and frankly, a lot of research, a lot of reading. But certainly your situation might be unique in some way. So certainly before you make any major decisions, you may like to consult with tax, legal, or other technical advisors. So hopefully this is very useful and helpful. But again, please rely on your technical advisors as well. So with that said, let's get into it. Roadmap for PPP forgiveness and beyond. These are bumpy roads, and maybe not quite sure what we're heading into these days. So we're trying to lay out a little bit of a map to help you to make some quality decisions, to plan, to move ahead. So we have 7 points, I think, key points that we'll discuss here today. What is the Paycheck Protection Program? I think most of you know, but we'll do a real quick recap. How can I use the loan? What about debt forgiveness? We'll certainly spend a lot of time talking about the nuances and the aspects of debt forgiveness. I think a lot of business owners initially thought, well, get the PPP loan and that all of it will be forgiven. And that may be the case, but it certainly may be the case that only a part of your PPP loan is forgiven. And while that's not the end of the world, you still end up with a quality loan in your hand at a very low interest rate. You certainly want to understand now, so that you can plan ahead, to what extent your debt is going to be forgiven, and what decisions can you make between now and June 30th in particular to maximize the value of your PPP loan, of your debt, the debt forgiveness on your PPP loan. Moving ahead, once we get through the PPP debt forgiveness conversation, I'm going to turn it over to Alexis Clark, who will discuss some other funding and relief options that are available. And then finally, Alexis also will discuss some best practices, some lessons learned, some perspectives that we've picked up here over the last months, years, that we would like to share with you. So with that, if we're fine, Mike and Carter, do we need a pause or good to go? Okay, all right. So Paycheck Protection Program, I think most of you know, part of a $1 trillion relief package that Congress and the President enacted back in March, provides the opportunity for low interest SBA loans that also may include a significant component of debt forgiveness. How can you use the PPP loan? Payroll costs, certainly, that's what it's for. Congress put it into place to fund and preserve labor force and employees. So certainly you can use it for most payroll costs, not all. Some types of benefits are not included, but salary, wages, 401k match, health insurance benefits that are paid by the employer. All of these costs can be covered by your PPP loan. Interest on mortgage obligations incurred before mid-February. Rent under lease agreements enforced before mid-February. What else? Utilities for which service began before mid-February. A quick note on transportation utilities, which I know is quite important for some of you. If you have significant fuel costs related to a fleet of vehicles, most people believe that transportation utilities is referring to fuel. So you have fuel for trucks. I know we have a trucking company here on with us today. Fuel for trucks or a fleet of other vehicles. It's believed, requires some clarification maybe, but it appears that transportation utilities, fuel costs rather, can be used as an eligible cost. how can you not use it? Don't distribute it to yourself and buy a boat or anything like that, right? I mean, there will be prosecutions. Or actually, Alexis sent me an email or an article yesterday that there was the first case that has been a prosecution of a business owner that took a PPP loan, fabricated that they had employees when they didn't have any employees at all. So listen, you can use the PPP loan for most business purposes, certainly for the ones that are stated here. So just be smart, and as long as you're not using it in a fraudulent way, you're probably going to be okay.
Hey, Rob.
Yes, Mike.
A lot of questions on this subject about, can I pay myself? If I didn't take a salary last year, or maybe I did, can I pay myself as a business owner? So can you address that real quick?
Yeah, no, I appreciate that. And that's a good question. It's a tough one. If you're already on payroll and you've been paying yourself, then you can certainly continue to pay yourself. If you were on payroll last year, you stopped paying yourself for one reason or the other. Again, bottom line is that we're going to need guidance from the SBA on this particular point, and there will be a lot of guidance that comes from the SBA over the next weeks, the next month or two. And this is a key point, I think, that will need some discussion. If you weren't on payroll last year and all of a sudden you add yourself, I don't know. That's a tough one. If you can justify, certainly you can justify that you're working in the business. There may well be an argument for it, Mike, but it's not entirely clear, and we are going to need to wait for some additional guidance on this point. If you've been paying yourself, continue to. If you used to and then you didn't, you could probably restart at normal levels, I would imagine, but we need some guidance. Alexis, do you have any additional input on this point?
Yeah, I was just going to say, remember there's the $100,000 salary cap. So you cannot go above $100,000 to get the forgiveness.
Yes, absolutely right. Mike, is that good? Okay, great, thank you. So debt forgiveness, let's jump into it. We're going to go through an example. It's a very simple 8-step process. Just calculate your forgiveness eligible costs paid or maybe incurred within the first 56 days that you have the loan, but not exceeding the loan value itself, excluding this and that and the other. Watch out for the 25% limitations, multiply it by the percentage of your current head count versus your base period. Watch out for the $100,000 limit. Watch out for the wage level limitations. To the extent you had a decrease of more than 25% of your wages paid to an individual, that's going to cost you as well. And then take the resulting figure, reduce it by the amount of the EIDL grant you received, if any, and that is the actual value of your debt forgiveness. Not so simple, unfortunately. However, there are some rules. We do have an example that we'll go through, and this is not at all meant to scare anyone at all, but just to make it clear that it is complicated. There's a pathway to understanding it. There are some examples that we can provide, and certainly we're all available to support you in any questions that you have. But it is complicated, and certainly is not as simple as I got a $300,000 PPP loan, and now I'm going to get $300,000 of forgiveness. You do need to understand the rules because you do have time between now and June 30th to make some decisions about your labor force in particular that will help you to maximize the value of the debt forgiveness. So moving on and jumping into the details here. Forgiveness eligible costs. We refer to this, and there are some slides at the end of the presentation that you can refer to later that go into these things in more detail. Wages, salaries, rent, mortgage interest, utilities. However, all of the above is subject to the following limitations. First of all, they have to be paid or maybe incurred within that 8-week period. Obviously, you can't have debt forgiveness more than the loan value itself. And then no more than 25%. This is a really tricky point, one that's is not going to affect everyone, but it's definitely going to impact a lot of people. No more than 25% of your total forgiveness value can be related to non-payroll costs. This is a huge, huge issue and limitation for some people. particularly for folks maybe that had higher payroll levels last year than they do now. You received a large PPP loan based on 2019 payroll. Your wage levels or your head count, your payroll isn't as high now. This is going to be a problem for some of you, and it's going to impact the extent to which you can get debt forgiveness. We will go through an example, but please take particular attention to that point. Other limitations, to the extent that your head count is lower now than versus the base period, your debt forgiveness will be reduced proportionally. There's also the wage level test. If you've reduced anyone's salary or everyone's salary by 15% or 20% or 24% or 25%, you're okay. You're not going to be impacted by this further reduction on debt forgiveness. And if you restore wage levels by June 30th to within 75%, with only a 25% reduction versus what they were previously, then you're probably going to be okay as well. But you do have to be careful. This is an employee by employee test. And if anyone or more has received more than a 25% reduction in payroll versus the pre-COVID levels, then there is going to be an impact on your debt forgiveness. And then finally, as we discussed, if you received an EIDL grant, not a loan, and probably no one has an EIDL loan yet, but if you receive an EIDL grant, then that will reduce maybe $10,000, maybe a few $1,000s. That will reduce your debt forgiveness for your PPP. Still okay, Mike? We're good? Okay, thank you. So an example here. This is a really good calculator that we found. These things might change some, so please keep your eye on it and stay in touch with us so that we can keep you apprised of any changes. But PAYCHECK put this debt forgiveness calculator together, and I want to go through.
Rob, let me interrupt you for a moment.
Yes,
I just had the question: is June 30th the end of it, or is it the end of the 8-week loan period? One of our clients got a loan on April 17th, and that's what he's trying to figure out.
Yeah, sure. So there's two things. That's a good question. Thank you. There's a couple of issues. You can spend your PPP money, and you may be eligible for debt forgiveness for those first 56 days that you have the money in your hands. So if you receive that money May 5th, you have until 56 days later, whatever that is, maybe the end of June or maybe the first day of July or something like that, to accumulate costs that may be eligible for forgiveness. However, separately from that, June 30th is an important date because for the headcount test, which may limit your debt forgiveness, and for the wage level test, which may also impact your debt forgiveness level, there is a picture, snapshot, it appears. What is your wage level? What is your headcount at June 30th? How does that compare to the base period or the reference period? And that will impact the extent to which your debt forgiveness is reduced. So again, you can use those full 56 days past June 30th if the 56 days carries you past June 30th. That's certainly fine. But your labor force, what does your labor force look like at June 30th? That's a really important point, and you need to think about what you want that to be, because it's going to it could have a significant impact on your level of debt forgiveness. Does that make sense, Carter? Okay. So, example here. I want to be careful on our time here. Loan value of $1 million. So based on last year's payroll, again, it's based on last year's payroll, you were able to secure a $1 million loan from your lender for a PPP loan. What's the first thing that you do? You look at the 8 weeks after you get the money. You look at the payroll costs that you pay or maybe incur. Again, really critical question on paid versus incurred. But you look at those 8 weeks, what were my payroll costs during that period of time? And let's say, for the sake of argument, $600,000. Now, this contemplates, frankly, a scenario where maybe your payroll level was higher during 2019, And now your wage levels are lower, your head count may be lower, and so your payroll cost for these next 8 weeks is only $600,000. What do you do next? Item 3, you look at your other forgiveness eligible costs: mortgage interest, rent, utilities, a few other items.
Hey, Rob,
And let's say, yes, sir.
we're getting a lot of questions on this particular aspect. What is deductible from?
Yeah.
So is it just rent for a building, or is it rent on lease equipment, that kind of thing?
Yeah, that's a good question. Definitely rent on a building, it qualifies for sure. It's an open question and needs to be clarified by the SBA whether rent of vehicles, rent of heavy equipment, for example, could be included as a cost as well. It's not clear. The legislation does not appear to exclude those non-property types of rents. However, it's not entirely certain that was the purpose either. So we will need to wait for some guidance and some clarity and frankly, some conclusion by the SBA over this next month or two on whether that is included.
And I should add, Rob, there is a push to move from the 75% payroll, 25% mortgage, rent, utilities to 50%, 50%. So that is being actively discussed and pushed. So this could all change within the next period of time.
Yeah, that's exactly right, Alexis. Thank you. It is a fluid situation for sure. What we have presented here are the rules as they stand right now, as best interpreted as can be done, we think. But there is heavy push from small business community and from others to make these rules more appealing and more attractive and more beneficial to the small business community. So there could be changes for certain to these rules. But for the moment, $600,000 in our example of payroll costs, $300,000 of non-payroll related costs. So what happens immediately? This first limitation comes into play. You're not going to get, in this scenario, you're not going to get forgiveness on that full $900,000 because your non-payroll costs, you cannot have more than 25% of the forgiveness. Only 25% of the forgiveness can relate to non-payroll costs. So that $300,000 is limited to $200,000, such that you get debt forgiveness on $600,000 of payroll, $200,000 of non-payroll. $200,000 is 1/4 of that total $800,000 where you now stand in terms of the max debt forgiveness that you can hope for. And we haven't applied some of the other tests yet. So be very careful about that. It's a critical issue. It's really going to impact some people. Hopefully it's loosened up some, but we can't know that it will be. The next step, you have to look at your labor force. The next 2 steps. This step here is looking at your head count. I'll go through this quickly. It's complicated. The details are complicated, but the concept is pretty simple. You look at your current head count. What is it? Let's say you have 8 full-time employees and you have 2 half-time employees. That probably is going to translate to 9 full-time equivalent employees. And if that's what your employee level is on June 30th, then that's the top of this equation. That's the numerator in this equation that we're going to put together. What is your reference period? You can look at either the first couple of months of 2020, or you can look at the first half of 2019. You have the option. You should choose the one where you had a lower head count during that period of time, because you want that lower part of this equation to be a smaller number. In our example, we've said that you have 9 people on June 30th, and previously you had 10 people. So per the debt forgiveness rules, you've had a 10% reduction in your head count. And what is that going to do? It's going to reduce your eligible debt forgiveness on a proportional basis by 10%. So we were at $1 million. We had $900,000 of costs that we thought were eligible, but we were capped because of the 25% limitation on the non-payroll. So that took us to $800,000. The headcount test We shaved off another 10%, so now we're down to $720,000. Next, the wage level test. This is the one that we discussed a few minutes ago. Person by person, employee by employee, June 30th versus the reference period. Did that individual's salary wage level decrease by more than 25% versus the pre-COVID-19 levels? If so, for one person, for 3 people, for 30 people, for all of them, if it's on a dollar for dollar basis, to any extent that you go over that 25% limit, you will reduce your, the debt forgiveness will be reduced accordingly. So it's okay to have a 20% reduction in wages or 25%. But if you go over it, it's not a light switch. It's not like if you go over that 25%, we don't think so at least. It's not like a light switch where if you go over that 25%, you lose all of that debt forgiveness. But the incremental portion is going to count against you. In our example, we've just said that's $5,000. That's going to reduce your debt forgiveness from $720 to $715. And then finally, the EIDL. If you received an EIDL, let's say $10,000, a grant, then the government figures, well, we've given you those funds already, and we're going to reduce that from your PPP debt forgiveness. And so you end up with $705,000 in this example that should be forgiven, assuming you have some good documentation and are able to navigate that conversation with your lender. So there's a lot there. We can answer questions at the end for sure, and after the presentation as well. But that's the situation in a snapshot. Not all of these limitations will affect all of you, but some of them are likely to affect most of you.
Rob, if I could
Yes.
just jump in quickly, I did see there was a question there about someone asking about extending the 8-week period out. That is also up for debate as well, because people obviously got their loans. They haven't necessarily reopened their business and rehired or put back staff. So there's a push to extend that period out as well.
Yeah.
Yes, absolutely.
And Rob, we're getting a lot of very specific questions as well that I know we're going to answer during the course of this presentation or at the end. But a lot of questions about specifically interest. How do you categorize that? Can line of credit be used as interest? When does the 8-week period actually start? And so a lot of questions around that specifically. But I also wanted to just mention to you and the audience, since we have the chats that are coming in per person, if we don't get to the question, either you, Rob, or you, Alexis, will send a response directly to each person that asks. Is that okay?
Certainly. Absolutely. Yep. It may take us a couple of days if we have a bunch, but we'll do the very best we can for sure. One easy answer, Mike, and thank you for raising those issues. The 56 days, the 8 weeks starts on the day that you receive the funds from your lender. So the day that money shows up in your bank account, that's when the 56 days starts. The other questions are tricky. The interest issue, we're going to talk about some of these issues, but the bottom line is there are a lot of open questions that need to be resolved through the SBA interpretation and the SBA regulations. The interest on the credit line, for example, not clear. Frankly, it's not clear. And we need some guidance, and we'll have to get guidance on how some of these other things apply. We have some guesses, and we'll go through, talk about some of them, and happy to discuss further at great length. But there are open questions, and that's important to understand. So to wrap up our example here, you had $1 million loan, $705,000 of debt forgiveness, leaves you with $295,000 of debt that's going to remain your obligation. Good news is it's a very, very low interest loan, 1% interest. Also good news, you won't have to make any payments for 6 months from the original loan date, maybe from the day you get the money. That's probably the better way to phrase that. But then you will have, you may have a residual loan value that you need to repay on a monthly basis for the next 18 months. 6-month deferral, 18-month payment period. That's the 2-year period that you may have heard about. It's not 2 years, in most cases at least. It's not 2 years from when you start making the payments. It's 2 years inclusive of that 6-month deferral period. Open questions. There are a lot. Costs incurred, costs paid, either. Is it your option? You know, if payroll was April 16th through April 30th, and I made the payment on May 7th, and I received a PPP loan on May 3rd, does my May 7th payroll count because it was paid after I received it? Does it not count because it related to the period before I received it? It's really, really tricky. I think you're going to be in good shape if you take a cash basis approach. What's questionable is whether alternatively you may have the option to take an accrual basis approach. So, but we need guidance. Rent on equipment or just rent on property. Most of what I read suggests that the legislation doesn't really appear to provide a limitation, but it's not clear. And rent on property is certainly fine. Rent on equipment or vehicles remains to be seen. What about rent paid to a related party? Seems like that's probably okay from what we're seeing and what we're hearing. If you have two legal entities, one's paying the other, there does not appear to be any restriction on this, but again, we need to watch out for the guidance. Interest on non-mortgage debt. We had this question, line of credit, for example, Mike, as you mentioned, a vehicle, a fleet of vehicles. Probably not. Doesn't appear it doesn't appear that that interest is going to be included as a debt, eligible or forgiveness eligible cost, but not entirely certain. This is I'm sure most of you have thought about this. This is probably the most the question we hear most. Can I load up my costs during the 8-week period in order to max out my debt forgiveness level? Can I make prepayments of my rent? Can I do advances to staff? Can I pay bonuses? Really tricky. I think there's going to be some limitations here. It's not clear exactly what they are right now. I think it is pretty clear that prepayments are not going to be allowed. You're not going to be able to prepay 6 months of rent and pull that into the 8-week period. I think that's pretty clear that will not be permissible. Can you make an advance to your staff? I don't know, maybe. Can you make a bonus? It's reasonable, it's customary, but you may find yourself in the position of having to justify it. We need guidance.
Remember, the whole intent of this was to keep people employed and paid. So
yes,
that's to get money into the hands of the employees via the banks to the companies to the employees. So that's the whole, I guess, overarching intent of the Paycheck Protection Loan.
Absolutely.
We're getting a lot of questions right now about commissions specifically.
Sales commissions to staff?
Yeah.
Yeah. I don't see, listen, if they're part of your normal compensation structure, and they relate to transactions that have had, and it's something you would have paid under normal times anyway, I don't know why that would be a problem. There's no exclusion for commissions of which I'm aware. So if it's part of a normal course of business, I would think that would be fine. But you can't prepay it and you can't fabricate it. But if it's part of your normal operating activity, I would think that would be okay. Alexis, any perspective on that point in particular?
I'd agree. If commissions are part of the normal compensation, then yeah, I can't see why they would be excluded. Agreed.
For the wage reduction test, is the forgiveness reduced only by the amount more than 25%? Yeah, I think it's pretty clear that that's the case. I did see one article calling that into question. So we need to be 100% sure, but I think that's going to be fine. Again, it's going to be a dimmer switch, not a light switch on and off as you cross that threshold. How exactly to calculate your head count? We need some clarity, probably based on maybe a 40-hour week for hourly rate employees, but we need some guidance. This is a really good topic here. How are the rehires going to work? You have the opportunity to furlough folks, bring them back by June 30th, reduce people's wages, bring it back to at least within 25% of what it was pre-crisis. But what happens if I try to rehire someone and they don't want to come back because they just don't, or their unemployment benefits are preferable, or what if someone quits or retires, or you fire them for cause? A lot of questions here that need to be answered through the SBA regulations and interpretations about how all of these things are going to work. Another point, if I furloughed someone, I rehire them on June 29th, I hit my test on June 30th, and then I let them go on July 2nd. Is that going to fly? Probably not. Understandably, probably not. But we don't know exactly what those rules are going to be, and there needs to be some clarification. What documentation do I need? We have an appendix to this presentation that goes through a number of items that some folks think you may need in order to claim the debt forgiveness and go through the discussions with your lender. But it's an important point and it needs some clarification.
Rob, if I could just jump in there, I just saw there was a question that came through, if I roll the dice and and items that I put through aren't forgiven, the worst that will happen is that the money just becomes a loan. And my answer to that would be, yes, that would be the case. You're left with a low interest 2-year loan at 1%, where you don't have to even make any payments for the first 6 months, and then you have to repay over the remaining 18-month period on a monthly basis. So
great.
That is the situation.
No, great. Thank you, Alexis. And I see a comment here on the chat room from Nina that talking about the situation with the rehiring or being declined. And I did, Nina notes that, over the last few days, I believe, and I did read about this as well, that if you formally offer a job in writing and they decline, then you will not be penalized in terms of having your debt forgiveness reduced accordingly. And Nina, that's a good comment. I appreciate it. This is a very fluid situation. I think that's my understanding that probably will be the case. But again, it does need to be documented. It should be in writing because you may be, if you're challenged, you want to be able to document it for sure. But Nina, thank you for pointing that out. I appreciate that.
Rob, we also had a question that was about what if they actually grow in terms of employment, the number of employees? How does forgiveness apply in that situation?
Yeah, I mean, if you're growing during that 8-week period of time and you're hiring people, that seems to be a valid way to use your PPP money, and appears to be a valid way to increase your debt forgiveness level. So if you've been thinking about hiring staff and growing, I'm not aware of issues that prevent that. Now, there may be issues if you can't hire them up and then let them go after June 30th. But as long as you pass whatever that test turns out to be, it appears from everything that I've seen and read that should not be a problem. As Alexis said earlier, the point of the legislation is to promote employment levels and put money in the hands of workers in the economy. So it seems unlikely to me that there would be any that there were any restriction or any type of limitation in that regard. Certainly from what I've seen and read. Does that make sense? So how are we on time here? 10:40. We certainly want to be sensitive to your time, and hopefully this is valuable so far. We're going to shift gears now, and I'm going to turn over the rest of the slides to Alexis Clark to talk about some other COVID-19 related issues for now as you're planning ahead. We will definitely double back at the end of this conversation, talk more about debt forgiveness and the PPP loans. But there are some other important points to think about and to know and consider that are not related to the debt forgiveness specifically. So I will, like as I said, turn this over to Alexis, let him run through some other important points, and then we will continue to take questions. So Alexis, I think I have the control here on the presentation, so I will do my best to cycle through it here at appropriate times for you.
Yeah, thanks, Rob. Yeah, look, I think it's a good segue now. You know, everyone's been talking about the Paycheck Protection Loan, and there's a bunch of other initiatives that are out there that are available to companies to take advantage of, you know, for funding alternatives. And the first, most obvious one is the economic injury disaster loan, which is what was out there. It's been out there for a while. It's there for hurricanes or cyclones, as we call them, down under. And basically you can apply up to $2 million loan, low interest loan, long-term, about 30 years. I think the first year of payments are deferred. And you have to prove you suffered, you know, economic injury. And everyone was applying for that. Then the Paycheck Protection Loan came out, so everyone focused on that. But now you can go back and, you know, reapply for that for additional funding for your business. The other parts, Rob, if you just scroll down to the next bullet point.
Yes.
Is in conjunction with the EIDL is the SBA Express Bridge Loan. So while you're waiting for your EIDL to be approved, you can apply for the SBA Bridge Loan, which gives you $25K. It's meant to be approved a lot quicker, and that money can come in and will then be offset against your EIDL when that comes through, which may take longer to be approved. The other bullet point there talking about, the SBA, if you have an SBA loan with an existing lender, existing loan there, the SBA are looking to give you 6-month payment of your principal and interest on those loans. So that is available if you have an SBA loan in place, and you definitely should apply for it for cash flow purposes. The Main Street Lending Program is also another initiative which is coming out. I should add the EIDL is not forgivable as well. The Main Street Lending Program is another initiative which is coming from the Federal Reserve. It's meant to be a wider pool of companies. The next slide, which we'll get to in a minute, goes into further detail on that, so I'll touch on that soon. There's also a bunch of state and local initiatives. The Harris County have a program. There's a program here in Austin where I am, which you can apply for and get various grants up to $10,000, $20,000. Facebook have grants applicable to locations where they operate, providing, and you should, you know, research the Facebook grants as well and apply for those. And we shouldn't forget, there's, you know, obviously the regular normal SBA loans, which banks are still looking to provide, and we're working with clients to access those SBA loans for expansion capital as we speak. Now that the hump of the Paycheck Protection Loans have been applied for, banks are willing to look at those SBA normal regular loans. The Main Street Lending Program, this was put in place so that companies who can't access the Paycheck Protection Loan or the EIDL have access to long-term and cheap government funds to support their business during this time. Minimum loan, $500,000. There's an EBITDA test. You have to have the loaning up to 4 times EBITDA. And basically up to 15,000 employees or less, at $5 billion or less revenue. You have to be a US-based borrower. There's no debt forgiveness for this loan as well. And but essentially, it's additional monies there, and you apply for this through your banker as well. So again, details on this program are still being bedded down, but this is like an SBA style loan, but with more generous terms, and that will be available as well for businesses.
Alexis,
just one quick point here.
Hold on 1 second.
Sorry, here we go. It's echoing.
If you have a PPP loan, you are eligible for the Main Street program. Can you guys hear me now, or did I mute myself? I'm okay. Okay, good. Thank you. There companies that were not eligible for PPP, larger companies should be eligible for Main Street, but if you did get a PPP, you are still eligible for Main Street as long as you can pass the other test. So I just wanted to make that point clear.
Absolutely, Rob. Yeah, correct. And we shouldn't also forget there's a whole bunch of additional deferrals and credits you can access. Payroll tax deferrals. I think it's a 6-month deferral that you can obtain there. Some of this is limited to the extent of how much the PPP is forgiven, and there's other aspects in terms of tax credit carry forward credits and relief payments from the US Treasury. Again, how exactly each of these different arrangements operate, you need to be dived into, but certainly if you have these type of expenditures or you think you can access them, certainly it's worthwhile to investigate and determine whether those cash flow benefits are available. And of course, and during this process, we've been advising clients, and it's all fairly standard stuff in terms of if you've got a landlord, defer on the tenancy. If there's any sort of other payment deferrals you can enter into with your clients, absolutely engage them and defer them to manage your cash flow and for your business. That just makes perfect sense in this environment. Yeah, perhaps if we just go to the last slide, Rob.
Yep.
Yeah. I'll just touch on these points here. Obviously, during this time, it's highlighted that cash flow forecasting is of paramount importance. The pandemic wasn't forecast, but we've gone into it, and obviously, it's been a massive impact on cash flow. So, maintaining regular cash flow forecasting, budgeting forecasting is of vital importance. You should speak to your lenders to restructure your debts so you can manage your business on an ongoing basis. And documentation of the PPP spending, there's more detail in the back of the presentation, is vital. Separate bank accounts for the funds to go into, so you make sure that you've got a clear trail on where the funds are being spent, and you've got it so you can have that audit. They've said that they're going to audit loans of 2 million and above. They may come down lower to lower levels. So just make sure accurate records are kept in this process. One client we've been working with in particular, in the test is an economic necessity test that you're impacted by the COVID problem. And they've asked us to document how they were impacted so that if there's any argument that comes back, they've got that written down and documented that they were definitely impacted by the economic uncertainty here. So that is something which you should consider doing if you're not that client was a private equity backed group. If you're not 100% owner of the business, you might want to document. In a clear-cut case where your business is shut down, clearly you're impacted. But there are more variable cases where you might have just had slightly reduced revenue, and you may need a better argument there that you have been impacted by the COVID crisis. And finally, I guess these are the key points that came out of it. Everyone was scrambling to get their PPP loan in place, dealing with bigger banks. But if you have a relationship with your banker, a person to speak to at the other end of the line, that was critical importance. That we saw a lot of the smaller banks got better access to the PPP program, and they were able to streamline the operations and get the applications in quicker to get the funds to their clients. And that, this is going back to old school banking, building that relationship, having multiple relationships with funders is vital. If you've got money there available, take it when you can get it, because you don't know what's coming. Access to credit is critical to functioning of your business. And if you can get that lined up and have it ready for any sort of situation, then you're protected to some extent from these types of events.
So thank you, Alexis. Thank you very much for kind of discussing those last points, which I think are very, very important as people look ahead and plan ahead. We have some great questions that have been coming through the chat room. Mike, Carter, do you guys want to throw out some key points to us or some key questions that you keep seeing?
I would also offer that if somebody from the audience wants to ask a question, they can raise their hand and we'll open up their mic so they can talk. But a couple of questions came up towards the end of Rob, of your presentation about distributions to owners being a sticking point. And so can you talk a little bit about distribution payouts on considered wages, and would those be considered forgivable?
Yeah, no, they're probably not forgivable. So they were excluded for purposes of determining how much of a PPP loan you could get. So salary paid to an owner is fine. If it was W-2, you were paying, doing payroll taxes, etc. And that's fine. But to the extent that you are maybe receiving a small salary plus owner distributions, the distributions were not eligible in terms of determining how much PPP loan you receive. And so I think it stands to reason that they also will not count in terms of debt forgiveness as well. So it's salary. It's salary that is showing up on a W-2. It's showing up on your 940s and your 941 payroll statements. It certainly appears that those are the payroll costs that will be eligible.
Okay, and specific to payroll, good question by Patrick Flynn. Can you reimburse yourself for wages you paid to employees prior to receiving the loan?
I'm sorry, say that again, Mike, what was it?
It's, can you reimburse yourself for wages you paid to employees prior to receiving the loan?
So the time that you applied for the loan and received the loan.
So is this a situation where I'm sorry, I'm not sure I'm clear on the question.
Yeah.
I think somebody applied for the loan. I think it goes back to the incurred versus cash part of it. If you applied for the loan on April 1st, but you didn't get it until April 15th, do those first 15 days between April 1st and 15th, are those measurement days?
Yeah, that's tough. That does, like you said, Carter, that goes back to that paid versus incurred question. I think what's clear is that if it's paid within the 56 days, that will count. What's not clear is whether, if it was, let's say at the end of the 56 days, it's accrued, from July 16th, or sorry, maybe June 16th through June 30th, but you don't pay it until July and you fall out that window. Does that count? That is an open point. And just in case the question was meant to be different, I have received questions from folks saying, hey, I haven't been paying myself. I've been paying my employees, but I haven't been paying myself over the last month or two. Can I now do a catch-up adjustment to pay myself as the owner for what I didn't pay myself during these last couple months where things have been really, really shaky? It's another good question. It's my guess, and it really is just a guess, is that there probably will be some relief for that, but it's not entirely certain, and we'll need to see what the regulations are.
Okay, thank you for that. And then a couple of consistent questions is about the employees themselves. Does it have to be the same employee? So if Freeman decides to leave and we replace Freeman with another Freeman, as long as it's same or similar position, it doesn't matter if it's the same. Does that make sense?
Is it really possible to replace Carter Freeman? That's really
I think not. I think we know the answer.
Bad example, but
it's a good question. It should be fine. It looks like certainly for the headcount test, that FTE test, you certainly you would be clear on that point, because you're just looking at FTE now versus the full-time equivalent employees previously. I suppose there could be some question on the wage level test, but I would be surprised if that were a problem.
all right. Another question in terms of the loan itself. Is it possible to have 100% of the loan forgiven?
Sure, absolutely. A Alexis, do you want to take that or?
Yeah, that's fine. Yeah, like that scenario would be where you have the same employees and same salary levels in 2019 as in 2020. So because the PPP loan is based on your 2019 payroll in the main, except for there's some seasonal arrangements, etc. But so it's based on that average payroll in 2019. So if that is the same in 2020 and the same employee level, then your loan, which is 2.5 months of your average payroll in 2019, you would have the same payroll that you would be spending in 2020. And then if you had, essentially you'd be paying 2 months for that, 8 weeks. And then the utilities and rent bills that you could also spend money on, if they totaled up, they would probably be in excess of that. So the sum total of those two amounts, the payroll in 2020 and the utilities and rent bills, should total 100% of the loan. So yes.
But that's going to be,
that's right.
It's based on the ask itself, right? It's like,
yeah.
Okay, as we've asked, either some great things happened where either we grew and the salary was able to offset some of the things that weren't, but it's
That's
still
right.
part of the ask itself.
That's correct. So we've had scenarios where there's been companies that had a lot of employees in 2019, so they had a big payroll, so they were eligible for a large PPP loan. But then in 2020, they downsized, not related to COVID, different situation, but they downsized. So the big PPP loan, but lower salary levels in 2020. So as a result, they've got more PPP loan than is eligible to be forgiven.
Okay, so on the other side, we're getting a lot of questions about, okay, well, we have this pot of money, but we also, we're doing the good college try to keep people employed. But if we just don't have a need for folks and we have to let people go, what happens? I think I know the answer to this, but you guys answer it.
I want to test you, see if you've learned anything from the presentation.
I think you're going to have to pay that money back or keep them until June, till the end of the loan period.
Well, I would say at the end of the day, if you still have this pot of money, if it will become unforgivable and just become a loan.
Yes, sure.
Sure. Yeah. And you can continue to use it for future payroll and future periods outside those 8 weeks. And it provides a working capital facility for your company that you probably wouldn't have had. You can use it to preserve your staff. Maybe, during the next 18 months, it even allows you to hire some new staff. And those are all really, very much the point and purpose of having this in effect. But yes, you're right. Under that scenario, getting the debt forgiveness is great, but having a 1% loan isn't so bad either, right? And so that's not a bad consolation prize if you're not able to soak all of it up.
One question from Ed Decora is like, what about guaranteed payments to the owner? And so this could be a situation of a company with multiple owners, and for whatever reason, one of the owners has a guaranteed payment within their operating agreement.
Yeah, it really comes back again to whether it's salary. Does it show up on the W-2? Does it show up on the 940 and the 941? Or is it an owner distribution? And if it's an owner distribution that is not showing up as payroll, then it's very likely not going to qualify for debt forgiveness.
Okay, thank you. What about in terms of funding timing? So you got the approval. How long does it typically take? What are you guys seeing in terms of the lag between approval and funding?
Great question. Depends on, there's approval at the bank level, and then there's approval at the SBA level. If you haven't been approved yet, I will make a couple of comments. You want to understand from your lender, where are you in the process? You want to make sure, has it been approved by the bank? Are they waiting on approval from the SBA? Have they received an E-Tran number, E-T-R-A-N? Have they received an E-Tran number from the SBA? If the bank has, then you're probably in pretty good shape because the SBA has effectively, kind of pulled you into the club. And it should just be a matter of time at that point. Sometime after that, you will receive loan documents from your lender. Sign those documents as soon as you can. And then from that point, it literally is anything from a few hours to 10 business days before you actually may receive funding. Does that answer the question, Mike?
Yep. Well, I don't know. We'll see if there's more questions. Oh, here's
Sure.
one. PEO. What if you're with a PEO? Okay. If you're with a PEO and you don't have an individual 940, 941, how will it be audited?
Yeah, great question. I read up on that, and I think it looks like you're going to be fine. There's been a lot of discussion about that point. I don't want to pretend that I know exactly the logistics or the mechanics there, but I did read that you effectively, even though it's through the PEO, you as the business owner are effectively making those payroll payments, and there will be some type of coordination with the PEO so that you can document the costs that you are effectively covering.
Okay, and we're getting, we've had a lot of questions specifically about the deductibility for the interest loan, and the other things that are not salary related, very specific questions. And so what advice would you give to folks about, they make a deduction and let's just say it's not counted. So what would your thoughts or advice be on that?
Alexis, you have some input you'd like to share?
Yeah, okay. So first of all, it's not a deduction. It'll be a forgiveness calculation.
Right.
What I would say on this is, obviously they've given some guidance, rent, interests on mortgages, etc. But the SBA guidelines are critical in this process, and they should be forthcoming. I don't know. Is it in the next 3 to 4 weeks, Rob? Is that what they're saying?
Yes, I would imagine. Yes.
Yeah, they're going to be the critical documents here to provide some guidance on some of these elements. And when they come out, obviously we will be happy to distribute them to everyone who's joined the presentation today, because that's going to be the critical determining point in this process. Today's presentation was really to give some framework and sort of understanding of it, but the SBA guidelines will be the critical documentation that comes out to.
Hey, Rob, we also have a specific question about if you establish your business during the last quarter of 2019, are you able to claim any payroll costs from the first part of 2020? Or would it just be a snapshot of your 2019 third or fourth quarter?
In terms of those reference periods, yeah.
And
yeah.
And I would imagine the loan calculation as well.
Yeah. So okay. So if it's the loan calculation, if it's determining how much of the PPP that you're going to receive, yeah, that's an interesting one, because there are some rules that apply to new companies, but most of the rules talk about companies that were formed after January 1st of 2020. And in that case, you look at, what is your payroll level during the first few months, and you calculate your PPP accordingly. There are some, I think, unintended consequences. Companies, for example, that grew a lot during the course of 2019, or maybe that started during the second half of 2019, are getting stuck a little bit in terms of not getting as much PPP loan as you really feel that you should get, because you can get stuck in this just kind of calculation vortex type of situation, right? Where, the rules are what they are, and you have to average your payroll from 2019. So we are seeing those situations where you don't get as much of a PPP loan as you maybe feel that you should have. The positive note is that since your PPP wasn't as high as you would have wanted, and your payroll levels are higher now on an average basis, you're probably going to get most or all of your PPP forgiven in that scenario.
So, Rob, another question is regarding employee salary. Can you give your folks a raise or a temporary raise, and how would that affect the forgiveness?
Yeah, I mean, that's going to be, I think, really facts and circumstances. I think we do need some guidance on those types of things, and that goes to the question that we discussed earlier of whether you can load up your costs during the 56-day period. You know, there may be some leeway there. You know, could you, for example, if you furloughed some employees, family-owned business, you furloughed some of your people, can you have some of your family members do more than they were doing previously? Yeah, probably so. Yeah, I think if you can, you know, within reason, that's probably could be justified. You know, can you load it up and pay people huge bonuses during the 56 days? Probably not.
Yeah, so we're going to double your salary because we like you. Probably not.
Yeah, probably not going to. Probably will not pass the smell test.
Hey Rob, back on the owner's guarantee payment, it's not run through payroll, but it is taxable at the end of the year for the owner. So how does that affect it? And then also a couple other questions. We've heard that it's critical to open another bank account for this money. Can you talk a little about that? So 2 questions there.
Yeah, that's a good question on the bank account. I'm glad someone asked that. On the other issue of the distribution, I feel like I maybe need to understand the details a little bit more. It seems pretty clear to me from what I've seen is that if it shows up on your 940 and your 941 payroll reports, then that's probably going to be eligible. And if it doesn't, then it probably doesn't. Now, I'm not a payroll expert and I'm not a tax expert, so I don't know exactly which types of compensation lands on the 940 and the 941, but it certainly appears to me from what we've read that if it shows up on the 940 and the 941, then it's in, and if it's not, then it's probably out. But we can do a little bit more research on that point afterwards and try to get a little bit of a better understanding. On the issue of the bank account, that's a good question. And, you know, I think that the cleanest thing to do is, you know, you get your PPP money, you have it in a separate account from your operating account. Then, you know, so let's say you have $300,000 there in a separate account that you set up with your same bank. Then day before payroll, you know, you're going to have $41,350 of payroll. The day before, you know, the money's going out. You transfer $41,350 from your PPP account into your operating account. Next day, that same exact dollar amount goes out to your employees. Very clear in that scenario. Money's coming from the PPP into the operating account and out to the staff. I think that's a good approach. You don't have to do that necessarily. I think that is one good way to do it. But, you know, one way or the other, you just want to keep a very clear record of how that money is being spent. And if there's another way that you can do it, great. But I think the way I just described is a really easy and really clear way to show the flow of funds and to show that the PPP money is landing into the hands of your employees and your facility rent and your utilities and all these purposes that are the stated purpose of the program.
All right, so what else you got, bud? By the way, as we're doing this, we're getting a lot of fantastic questions. I know that Rob and Alexis will be sending direct responses to each person that did this, but we're also going to use this to create an FAQ document or frequently asked questions, and that will go out to all participants.
I see a question that just popped up from Kenny, who in Tennessee, who I know well. Kenny, thank you for joining us. Kenny's asking about hazard pay for higher risk employees during this time.
Rob,
yes.
Can you also say in the bank, because we had a question before about since employees are now dealing with the public, can they also introduce hazard pay to their salaries as a function of compensation?
Yeah, it would seem reasonable. I don't know that I have not read about it. Alexis, I'm not sure if you have read about this specific point. I don't see in theory why that would be a problem. It's normal, it's customary, it's because of the exact issue that we're all dealing with. It's for the benefit of the employees. Again, I think there's probably a reasonable customary type of test that will be applied, and it may be a judgment call at the bank level, for example. That's another one that we can study and research and get back to people on, but I don't see why in principle that would be a problem. Alexis, do you have any perspective you can offer on that one?
Yeah, I'd agree with that sentiment. I think that would be a reasonable.
You guys think that there would be a litmus test to say, hey, based on the position, if it's something that you face people all the time, there's some hazards that are associated with that you may have not had before. So it would be reasonable to conclude, again, not tax advice or legal advice, but it would be reasonable to conclude that that should be permissible.
Yes.
Yeah, I think so. And if normally hazard pay is 2 times regular pay, and you're paying 2 times because of a legitimate hazard pay scenario, I don't see why that would be a problem. You just can't, if it's normally 2x, you probably can't make it 10x, or you'll have some eyebrows raised. But if it's within normal standards, I don't see why that would be a problem.
Okay.
Someone asked about a PPP loan based on a company's P&L and not necessarily their direct payroll costs. I'm not aware of that. All PPP loans, as far as I'm aware, are based on 2.5 times the average monthly salary, generally in 2019. So
that person might be talking about sole proprietors because, and I haven't spent a lot of time focused on this point. We've done most of our work and support with companies, but with sole proprietors are eligible for PPP loans. And there was a lot of discussion about how exactly do you calculate these things. And for a sole proprietor, you look at your Schedule C, you look at effectively the P&L that you had during 2019, and based on that calculation, I think you take 2.5 twelfths of that net income from your Schedule C. That's your PPP level, and then there's a calculation about how much you can get guaranteed or forgiven, etc. So that's the only scenario that I'm aware of where kind of the P&L, the whole P&L comes into perspective, is if it's a PPP for a sole proprietor or an independent contractor.
Can you talk a little bit about sole proprietor? I know we have quite a few on the phone. I've had just one in particular. It says, if I have a company in which I'm the sole employee and I received a loan, if I paid myself last year and in January and February, but not pay myself in March as cash flow was reduced due to COVID, can I now start paying myself? Okay,
good question. So my first question is that person said, I'm the only employee of the company.
Yep.
Again, if they are truly an employee of the company, W-2s, 940s, these kind of things, then I think that's going to be fine. Now, I'm not as well versed on the sole proprietor rules as with the companies. Mike, can you repeat the second half of that question again?
That I had paid myself last year and in January and February, but did not pay myself in March as cash flow was reduced to COVID.
Yeah.
Start paying myself.
Yeah. So I think regardless of whether that's a sole proprietor or a more of a company type of situation, that again, I think we probably will get some guidance, but I think that's reasonable. If you used to pay yourself, you stopped or you reduced it, and now you bring yourself back to the normal levels, I don't see why that would be a problem. Extension of that question, can you catch up? Can you stop paying yourself for a couple of months? Can you now, during the 8-week period, catch yourself up for what you didn't pay yourself previously? I don't know. I'm sure there's going to be some guidance on that particular point. But I think you can pretty comfortably return yourself to what your normal pay was. You might be able to do a catch-up adjustment. You can probably do a catch-up adjustment. I'm just not so sure that you're going to get debt forgiveness for the portion that was related to the you're probably not. You're probably not going to get debt forgiveness related to the compensation that related to before you received the funds, because the 8-week period would not have started at that point, even if you had paid yourself. So could you pay yourself a catch-up adjustment? I think probably so. Unless it's egregious or, but it may not be given.
Hey, Rob, we're also getting a question. If somebody received their loan on 5/1, how long do they have to apply for forgiveness?
Okay, you received the loan on 5/1, 56 days start. So you got, 31 days in May and you have 25 days in June. So the end of your period is June 25th in that scenario. So, so whatever you spend during that period of time, that's what matters. I believe, don't quote me on this entirely, I believe that there is then a 60-day period after the 8 weeks ends, I think, where you then can apply for forgiveness with your lender. There's an interesting planning strategy related to if you're taking advantage of payroll tax deferrals. There's actually an interesting discussion point there about should you maybe not apply for the forgiveness immediately or not, but I can take that as a sidebar with anyone that's interested. But from what I gather, you're now at the end of June. It's probably going to take a month or 2 or 3 maybe before things really get resolved in terms of formalizing and finalizing the debt forgiveness. But the important point is, I believe, and we'll follow up on this, but I believe that you have 60 days from the end of that 56th day to apply and work things out with your lender on the debt forgiveness.
Thanks.
So guys, we've had a lot of great questions. Can you talk a little bit? My wife texted me. She's like, what about the $10,000? How does it apply? So talk a little bit about the $10,000. Just that'll make it easier at home later.
Sure. The EIDL?
Yeah.
Yeah, go ahead, Alexis, if you like.
Yeah, sure. I'm picking you up. You weren't listening to Rob's calculation, were you?
Hey, you made it hard.
Basically, that comes straight off the forgiveness amount. So you can't double dip. So the 10 grand you got in as an EIDL grant, effectively, that comes straight off the amount that you're able to be forgiven on your paycheck protection loan. So it's a straight one for one. So you're not out of pocket per se because you got the cash in your hand anyway. So.
And hey, wife, he didn't say you weren't listening at all. He was saying I wasn't listening. Just to clarify that.
For domestic tranquility.
Certainly, we know that's true.
All right. So anything else from?
No.
All right.
This has been great, guys. Thank you so much.
Now, I guess what I would ask for both of you is understand we've got a lot of people on the line. Some people have dropped off, but I would love for you guys both to give just parting thoughts about maybe I've already have the loan. I don't know what to do, or how do I find additional information? But for that business that is in a state of uncertainty, what advice would you give to both or to that business owner?
Yeah, Alexis, you want to jump in and then I'll add my thoughts.
Sure. Yeah, I'd say obviously keep accurate records on everything. Do the best practices on the separate bank account. Monitor the updates on the SBA guidance and legislation because this is a moving topic and there's new information coming out almost daily on this. So I'd say, obviously maintain that data on your payroll and your register and who you've got employed, and just keep abreast of all the information that's coming out.
Yeah, I agree, Alexis, and Mike. The 3 or 4 of us spoke a little bit yesterday or maybe earlier in the week. As you're thinking about your PPP loan and how am I going to use it, I think there's a very different perspective depending on whether you feel that this situation has been a bump in the road and a hurdle to clear, but your company's going to get through it. You're going to come out the other side and you're going to be okay. If that's your perspective and you think that's the reality of your situation, then there is, kind of one set of approaches and strategies with respect to your labor force and the way you're spending your PPP money, et cetera, that you might want to take. If, unfortunately, on the other hand, you have some real question about whether you're going to get through this and about whether you know, the PPP loan is nice and it helps, but you're going to have problems once the PPP money runs out and you're not so sure that the business is going to remain viable. I think in that scenario, you have a different set of, I think your thought process needs to be a little different in terms of how you handle it, because you don't want to be in a situation where you've taken a PPP loan, spent a bunch of money on all of these things, not all of it is forgiven, the business doesn't really survive, and then you have a loan that you still need to cover. And so I think you need to think about that very differently, whether or not you see yourself as a hurdle to be cleared, or whether you have some pretty serious concerns about the future of your business. And that's something that we can talk about offline with anyone that would like to discuss this point. But just to close and to finalize, the documentation is important. The trail is important. But the common sense test does apply, I think, with a lot of these things. So, you know, if you're doing things that are customary and normal and reasonable, you're probably going to be okay. We do need, at the same time, there are a lot of rules that don't necessarily take common sense into mind. So pay attention to the rules as well, to how the regulations are interpreting the legislation. And if people have questions at all, certainly we're very happy to talk with small subsets of this group or with individuals on a case-by-case basis to discuss their particular situation. So,
Rob, as I understand it, if anybody has a question about any of the PPP loan programs or the additional programs that they could use, so the additional stuff that Alexis talked about, you guys are the specialists in that area. Is that correct?
I'm very happy to answer those questions. We've read a lot, and we're working with small business owners, you know, just every day of our life, just about. So we do have some good perspective that we can share on these things, Mike. Thank you. Certainly our email addresses are here on the slide, and either of us will be very happy to talk things through and talk about specific cases. And how to plan and strategize with respect to the debt forgiveness issues, or with respect to just forecasting and planning and developing banking relationships and doing all of these other things. These are things that we work on with our clients all of the time. So yes, very happy to have those discussions. I really appreciate Mike and Carter, both of you guys setting this up. Carter, for you sponsoring the event. Alexis, for all of your valuable input, and certainly for everybody that joined earlier and is still on the call, even for all the